Today and during the whole week, traders have been focused on the U.S. Labor Department report, notably forecasts are quite mixed. Thus, the unemployment rate is expected to remain unchanged. Meanwhile, the number of new jobs in the non-farm sector may add to just 160,000, which is a very small rise. Judging by the U.S. population and its growth pace as well as economic activity, the economy needs about 250,000 new jobs every month. During the last 10 months, the average rise has been around 239,000 a month, which is not far from the target. However, last month, the non-farm sector created only 150,000 jobs. It means that the average reading is falling, thus increasing the risk of a higher unemployment rate. Nevertheless, traders may focus on the fact that at present the unemployment rate is unchanged, and this could act as a driver for the US dollar. If the US Labor Department report unveiled mixed figures, the market reaction will be hardly predictable. Such a situation may force investors to rely on other factors. At the moment, the main factor that may shape market sentiment are announcements made by ECB officials. They continue to repeat that the regulator will not cut the key interest rate at the upcoming meeting, and this in turn may cause a decline in the greenback. On the trading chart, we see that the euro-dollar pair almost reached the level of 1.0750 amid a downward movement. Just after that, the volume of sell orders dropped, thus allowing the pair to climb above 1.0800. Although the price showed a local pullback, there are no radical changes in the market. Under the current conditions, traders are better to focus on the price behavior around 1.0800, and the quote may either consolidate above this level on a daily chart or drop, thus hitting a new local low of the downward cycle. In other words, the upward scenario will become possible if the price consolidates above 1.0800 on the daily chart, and the downward scenario will be considered by traders if the quote slides below 1.0750. Meanwhile, the pound sterling slackened the correctional cycle near 1.2550, where the volume of short positions dropped. As a result, the British pound recovered after the recent decline and climbed above 1.26. The price settlement above 1.26 on the daily chart may point to a jump in the number of long positions. In the event of this, the price may continue climbing to 1.27 to continue the downward correction from the resistance level of 1.27. The price should settle below 1.2550. And that's all for now. We keep monitoring the financial market situation. Subscribe to our channel and see you in several hours. We will take a close look at the US trading session.